Okay, and just for the record, we did the roll call at the beginning of the meeting, but since then, the record will note that Supervisors Calabrese and Story have joined the meeting.
Hi, all.
Chairman Headland, it's back to you.
Well, thank you. This is a meeting of the Administrative Committee, County of Dunn. We started this meeting at 8:30 this morning. We convened into closed session, conducted 5 interviews for the open position of CFO. And now we are back in our monthly meeting and reconvening. We are down to item 4 on our agenda for the day, and that is to reconvene, which we have done. And then now item 5 is approval of the minutes from our last meeting, which was October 28th of 2021. Do I have a motion to approve those minutes?
So move.
Supervisor Lino makes the motion. Is there a second?
Supervisor
Okay,
Tripp.
I'll second it.
I'm
Supervisor
sorry.
Tripp had his hand up.
Okay, thank you, Supervisor Tripp. I didn't see up on the screen here. Any questions or concerns? Any corrections? Hearing none. All in favor, please say aye.
Hi.
Aye. Any opposed? Motion passes. Item 6 is public comment. Krista, do we have any public comments for today?
No public comment.
Okay, thank you very much. That'll move us down to item 7, which is our staff reports. We all received in our packet of information reports from our staff that report to this committee. Are there any, we're going to start out, are there any questions from any of the supervisors about any of the reports?
If I may, Mr. Chair, first, I think we want to hear the investment report from PFN.
Oh,
Our
okay,
investment advisor.
we can do that.
I
That
believe
would be
we
good.
have Sophia, our treasurer, is with us, and is it Kathleen Walters from
Yes,
PFN?
hi, thank you.
Sophia, do you want to do the introductions to this topic?
Sure. So this is Kathleen Walters. She represents PFM, who is our investment company that we use. Generally, Brian Johnson, if you're familiar with him, has presented in the past. He was unavailable today. So Kathleen has graciously stepped in. She works very closely with Brian in regards to Dunn County. So we're pleased to have her with us today. Thank you.
Well, thank you so much for having me. I'm sorry Brian couldn't join. He sends his apologies, but you have me today. I am Kathleen Walters. I'm a director at PFM Asset Management. I've been here about 12 years, and I am based in our Milwaukee office. So I'm just across the state. I will share for you my screen here in it, but just in case I lose all of your faces, I will just say, please jump in if you have questions. It's been a fascinating time to be an investor in the market. The news changes very rapidly. So if there's something on the slide that's a little out of date, or I'll try and update it the best I can. The performance report I'm sharing with you today is through the time period September 30th. So if you bear with me a minute, let me see if I have my share button screen. I'll just get a bearing. Does everyone see a Dunn County cover?
Yes.
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 Wonderful. So far, so good. Okay. Just extend the faces so I can see anyone who wants to raise their hand. And I'll get a jump start. I thought today I'd start a little bit with a market update. It's certainly been an interesting few months, if not few quarters, with the markets. And then I'll talk specifically about how your portfolio's done. This investment performance report should look very familiar. I believe Brian provides this to you. This quarter, we updated some of the colors and improved the look of it. So I will try and also outline just where to read certain information in the places where it was updated. So starting with the market, I'm going to move forward one page. Quite unfortunately, COVID continues to be the story. I do hope that one day soon I don't have to start my market updates with an update on COVID, but that is not unfortunately the case. COVID continues to be a main concern for investors. It's a concern for the markets, and the statistics on COVID and infections are tracked very closely. So this performance report is through the time period of September. And if you look at the left, you see a chart that shows, oh, I'm sorry, was there a question?
Yeah, we actually are just seeing the cover letter. Nothing has changed on our screens.
Oh goodness, okay. I'm gonna stop sharing and see if I can reshare if that fixes the problem. Do you
Now we see graphs.
Okay, good. You would think after several quarters that I would be a pro at this point. I apologize for that. So the chart on the left shows you COVID cases. The blue line is the global rate, and the yellow line is the US rate. And at the end of September, there was quite a bit of optimism. We had just come off of the Delta peak, which is the last two peaks you see there on the right. If you were to extend this chart further on to this week, unfortunately, you would see that the COVID reinfection rates are increasing again. Globally, we are getting back close to this most recent peak. In the US, there's been an uptick most recently. Unfortunately, quite a bit of that has to do with the new Omicron, that's quite the name, COVID, a variant that is now more popular and is working through the global population. So the markets are very closely tracking this because, stepping back for a minute, generally speaking, economic activity involves us all going out to shop, to consume goods, to get to work. And as long as COVID is around, it will continue to impede our ability to do that. So tracking COVID will continue to be a very important story, and it ties to some of the statistics I'll talk about here in a second. So one of them is GDP. This chart, again, is updated through September 30th. GDP had a very good start to 2021. Coming off of 2020, when there was a large retraction in the US economy, by many measurements, the US bounced back pretty quickly. And you can see the quarterly GDP measurements for the end of 2020 and the beginning of 2021 were very positive. If you think about this in context of the last decade, the US economy really was only growing about 2.5% per year. So seeing numbers 6.5% was very positive. There was a lot of optimism that coming out of COVID, we were getting a handle on cases, that the vaccines were going to allow us to reopen, economic activity was going to increase. Some of that has been moderated a bit. So the forecast you see here on the right, this was through the period of September. Expectations have, in fact, actually trended down a little bit. It has much to do with the continued spread of COVID. That third quarter GDP number, which is listed here just as a forecast, has come out since this chart was created. GDP grew only by 2.2%. So it's a bit of a mixed message, and that's true with just about every statistic I'll talk about today. While economists and the Fed and all the individuals that speculate on these types of things are anticipating continued growth, our expectations collectively have been moderated a bit as we haven't quite gotten a handle on COVID and some of the other concerns that have resulted. One of those is unemployment. So you can see on the left, we're showing you the US unemployment rate. This is the unemployment rate that if you read the papers, you think about, this includes all of the individuals in the working world who are actively looking for jobs. And the reason I say that is that one thing that happened because of COVID is that a large percentage, or a larger than normal percentage of individuals exited the workforce. There was a significant population of individuals who were near retirement and chose to retire early. There's been a population of individuals who perhaps can't re-enter the workforce as easily because of childcare concerns is a main example of that. Our unemployment rate, as of the most recent measurement, is about 4.6%. So from a statistics standpoint, that is a pretty positive number. That is close to full unemployment. Full unemployment in the US is generally considered low 4s, high 3s. So you can see if you're looking for some optimism, we are certainly trending the right direction. The chart on the right shows you the monthly gain in jobs. August was a bit of a disappointment. September and October were more positive, closer to 500,000 jobs. We get a new jobs report on Friday. The expectation is closer to 50,000. So again, we are continuing to add jobs, not quite as many as you might hope. As individuals who are out consuming goods, you've probably noticed that labor shortages in certain areas continue to be a problem. And I think that this next chart will show you a little bit about what you are already recognizing and witnessing. So what we're showing for you here is the number of jobs lost by industry, broken down by industry, and where the current vacancies are. So there's probably no surprise that the leisure and hospitality were a segment of the market that lost a significant amount of jobs because of COVID. All of the hotels were shut out, no one was going to restaurants, so it does make sense. Those industries are still, are at this point, trying to rehire. And that continues to be a stress. If you have gone out to restaurants recently, you've probably had your waitress tell you that they are short-staffed and to be patient. That seems to be a common thing that I'm told here around Milwaukee. Other segments of the market that were hit, education, health services. Again, as a direct result of COVID, I imagine being a teacher is a very difficult job over these last few months as COVID restrictions really changed the way that they had to work. Health services, again, frontline workers. These trends are unfortunately continuing. There is some positives when it comes to full unemployment that does impact the Federal Reserve and how they are considering raising interest rates. So this particular portfolio for local government investors here in Wisconsin, we can only buy high quality fixed income debt. So what the rates on the US Treasuries are very important. And I'll talk about that in a second here. The other thing that impacts Federal Reserve investment monetary policy, they care about two things. To step back for a second, our Federal Reserve cares about two things. They care about keeping the US economy at full employment and price stability. And what that means is a reasonable amount of inflation. Inflation has made the news quite a bit. For a very long time, almost a decade, we had very little inflation in the US, less than that 2% goal. We have seen that reverse. In the last few months, we've had some very measurable rates of inflation. What we're showing for you here, we took this chart back to 2019, December 2019, so right before the pandemic. And we said if 2% was the goal over long periods of time for the Federal Reserve, where would inflation be today? And we extended that out using the two different measurements of inflation, the CPI and the PCE. And what you can see is that for a long period of time, we were below that measurement, and we have now exceeded it. Generally speaking, the markets are concerned by this, but not overly concerned. It is something to be tracked. There was a period of time, many months, when the conversation was on this idea of transitory inflation. These are quirky one-off moments that are the result of unwinding the pandemic. They won't be persistent. But that is something that's clearly tracked. If we were to get sustained or persistent inflation, the Federal Reserve would feel more pressure to raise rates. And we've started to see slightly more concern this week with comments from the Federal Reserve, and I'll talk about that in a second. So what's driving inflation? So when I talk about this idea of transitory inflation, why would someone say that? So you can see two measurements here. On the left, this is CPI. Some of the higher measurements we've seen, if you extended this and include September and October, those numbers would be slightly higher, in fact. And on the right, we've broken out the drivers of CPI. A few things are a bit quirky. So used cars and trucks have been a major driver of inflation. That is an unusual economic outcome. Generally speaking, you think of the car that you own as a depreciating asset, but because of supply chain constraints, the chips required to build new cars can't get to Detroit off the boats. The used car market has really taken off. That is unlikely something that will extend for multi-years, but is something that is currently happening and will probably happen for the next few months. The other thing driving inflation at the moment is energy. Anyone who's currently driving a car is very familiar with the fact that it costs a lot more money to fill up your car with gas these days. Energy in and of itself tends to be a very volatile asset class. It's not the most expensive gas we've seen in the decade, but it is close to the top. So all of these factors are really driving those inflation, and we see that pressure on the Federal Reserve. So again, the Federal Reserve of the United States is doing what they can since the pandemic began to try and increase economic activity. And they're really using two tools to do that. They are keeping the Fed funds rate very near zero. So what that means from a practical standpoint is that all borrowing costs are very cheap at the moment. Yields are very low. Reinvestment rates are unfortunately also low because you continue to buy at those rates. They are also using bond buying program. The Federal Reserve until November was purchasing $120 billion in bonds a month to try and increase economic activity, keep long-term interest rates low, in addition to the short-term rates they can directly change. So what we've included for you here are some of the statements. Over the last few years, the Federal Reserve has every 6 weeks released information to the market. Some comments on where they think economic activity is going, and also an expectation of where they think the Fed funds rate might be in the future. What we saw in November is that the Federal Reserve decided they were going to end the long-term bond purchasing program. They were going to unwind those 120 billion of purchases per month. And they said at that point that they were likely going to do it equally from November to June. Just this week, in comments to Congress, Chairman Powell said that it will likely expedite that process, do it quicker as a result of some of these inflation concerns. What you'll see on this page, this is the so-called dot plot. It's a bit confusing to read. What it is essentially the Federal Reserve surveys its members, asks each individual, where do you think the Fed funds rate will be in the future? And they use the end of the calendar years as those periods of time. What you might conclude and what the market believes based on the Federal Reserve's guidance and just generally their expectations factoring in economic activity and inflation is that the Federal Reserve may raise rates in 2022, excuse me. The expectation recently, about half the market who participates in those types of surveys thinks we'll get 2 rate hikes by about June. Take that for what it's worth. Those individuals that speculate on that type of activity tend to be making educated guesses. Sometimes it works out that way, sometimes it doesn't. What it could mean is higher interest rates, higher reinvestment rates for the portfolio, and from an investment income standpoint, long-term, that is a positive. And you can see that if you look on this page for a moment right here. This is the U.S. Treasury yield curve is what we're graphing for you here. So the way that you read this, all the way on the left, you can see what is the current rate for short-term U.S. Treasury debt. It's basically nothing. The U.S. Treasury 3-month debt is earning just over 0%. What we've shown for you here is the range over the last, call it 11 months or so. This is the year-to-date range. Interest rates have been a bit higher recently. You can see that we are trading at the top of that range, and that's the market pricing, this expectation that rates will increase here in the intermediate term, about 6-month time period, 12-month time period. Rates have come down just a little bit this week. Volatility in the market is very persistent these days, but we are still generally on the high side of where we've been. So that does, in fact, if you're looking for some optimism here, give some opportunities, and in your portfolio, as you see new transactions, we are getting slightly better rates than we were before. And I'm going to pause because I think someone might be asking a question.
Mhm.
Okay, perhaps it's just feedback. And that's where I will pause, and the market's a really good chance to give someone the opportunity to jump in and see if they have any questions. No? Okay. So very specifically, what has happened in your portfolio? So if I can go through a few of these slides. So here is a snapshot of a Dunn Company's portfolio. You have just over $6.5 million invested into a core account. And your portfolio is very well diversified, and there's a page in a moment where we can look at this pie chart. Again, I mentioned earlier, we've revamped our quarterly performance reports with some nice new graphs. I guess pie charts are out, donut charts are in. The marketing people tell me that that's the case. So you can see that there's a brand new donut chart, but it's all communicating very similar information that you've seen before. One new piece of information in this quarterly report, which I think is helpful, is this series of pages. It's the issuer diversification. You can now see the exposure from every individual holding. Wisconsin state statute is very strict on what can be purchased in your portfolio. It's mainly high quality fixed income debt, so very heavy allocation to treasuries, agencies like Freddie and Franny, supranationals, which are instrumentalities of the United States government supported by an act of Congress, government debt, and small amount of corporate debt. You can see a few different corporate names here. Every corporate name has to be AA rated or better by state statute. And as part of our own diversification and risk protection process, we try to keep every individual corporate name at less than 2%. So looking at the snapshot of your portfolio, on the right here, you can see another chart that details that breakdown. So the largest component of your portfolio is U.S. Treasuries. That is generally true, and it has been for a little while. I'll show you that in a moment. U.S. Treasury debt is generally considered the risk-free debt, very liquid. It's a nice component of all government portfolios, but we do complement that with some diversification where we can. Corporate debt and asset-backed securities, some of these other diversifying asset classes have helped add long-term performance to your portfolio, and when done well, we do believe in them. The credit quality of your portfolio, again, you can see that listed down here. We're showing for you just the S&P credit ratings. So in the instance you don't see a AA rating there, those securities would be rated AA by Moody's or Fitch. And the duration of your portfolio, your current investment strategy is listed here versus its benchmark. So you can see at the moment, as you might imagine, we've overweighted slightly in that 3 to 4 year bucket there, partly because of the steepness in the yield curve. There's slightly more value going out slightly beyond 3 years, given the really short-term opportunities that we can currently buy in the market. Here's your historical allocation. You can see how each quarter the portfolio has ebbed and flowed. So most recently we have, you can see about 51%, for example, of your portfolios in U.S. Treasuries. It was a little bit closer to 40% about a year ago. It has a little bit to do with opportunity set in the market. We do like supranational securities. The ones that we purchase tend to be AAA rated. They do have nice yield advantage, so it does make sense, but they don't issue all that frequently. So we buy them when we can find them, but we can't always find them. So here's the historical allocation for your perspective. But how's your portfolio actually done? So on this page, it is reformatted. We are showing for you the total return of the portfolio. The top section is the market value earnings. So if you look at this, if you look at the second dark blue bar, you can see the market value earnings in dollar. Since inception, this portfolio has earned about $810,000. Below that, you can see the total return performance. Total return performance would include all cash flows and the mark to market that happens as interest rates move in the portfolio. We are proud of the fact that your portfolio has outperformed the market in all trailing time periods listed here. We do include your portfolio performance versus the benchmark. In this case, your benchmark is the 1 to 5 year U.S. Treasury index. More recently, you can see that the 1 year total return was impacted a bit by rising interest rates that we saw in the beginning of the year. Unfortunately, rising interest rates is great for reinvestment. In the short term, rising interest rate does affect the prices of bonds, so that was to be expected, but we are pleased that we outperformed even during that tough market. What does this equal in book value? This page is showing for you the different components of the portfolio that really drove the performance. So you can see treasuries and supranationals. That's how you read this if you look at the different sectors, what's driving the performance for the quarter. Treasuries and supranationals were particularly strong performers. Asset-backed securities added a little bit. Corporate diversification was not as great this quarter, but had done well previously this year. And in this particular page, this is earnings, but on a book value basis. And you can see over the various time periods, the book value earnings of your portfolio. So since inception, about 667,000 in book value earnings. And I'm going to pause because that is my last page and see if there are any questions or concerns. Oh, I see, Tim, you're talking, but you're on mute.
I have a question. The portfolio looks great. Performance is wonderful. How about your fees? Are we going to get any drops there?
Drops in fees. No. We have, well, I don't know your fee offhand, unfortunately.
It's about $1,200 a month.
Your fee is actually slightly lower than others already. We have over the years instituted better price stability and price discipline, and our minimum fee has gone up. So I believe your minimum fee is about $15,000 a year. Does that sound right?
Ballpark, yeah.
Yeah. So from our minimum fees currently, that is a current discount. New clients would pay a minimum of $25,000.
Well, see what you can do about that. How's that?
I will ask. I will say I am a director. I do not have any ability to control that, but I can, always talk to my bosses about those things. Whether or not they will listen, I do not know.
Thank you very much.
Oh, hi, yes.
Yes, I'm just wondering, what tools do you use in determining your forecasting? I mean, what people, what organizations, what writing, how do you come up with your calculations?
Yeah, that's a great question. So we do have an entire team that does nothing but portfolio management. There are about 24, 25 individuals, and they have lots of tools at their disposal. They all have Bloomberg machines. They track the economic forecasts that are provided. They read the Federal Reserve minutes. We have investment committees of many really experienced individuals. One of the members of our investment committee used to manage the pension for the Federal Reserve. Generally speaking, PFM is not really in the business of forecasting. Forecasting interest rates is a very tricky endeavor. To be quite honest, people very, very rarely get it right. I can say that because I'm an economics major. Economics is one of those fields that you can spend your whole life doing and never be right and still have a job. I tease, I promise. So what we generally do when it comes to thinking about rising interest rates or forecasting interest rates is we look at the general market sentiment. But from the credit research standpoint, all the due diligence, we have individuals on our team that do all of that work. They look at all the individual holdings for all the corporates, and they come to those independent conclusions themselves. From an investment strategy standpoint, the way that we create our portfolios doesn't really modify with or change based on where interest rates might go. We aren't known to take massive bets because we found that it's typically a losing bet. There was a long period of time when I first started at PFM where the general consensus was interest rates are going up. And if you knew interest rates were going up, that the most profitable outcome would be to be short.
Mm-hmm.
But we know with perfect hindsight that would have been a bad choice because interest rates did not go up. So what we generally do is keep a pretty consistent investment approach with a very similar average maturity. And that really is a hedge against trying to make that guess correctly.
So with that group of individuals that you've hired, do you have some that would be considered conservative, some that would be less conservative, so that there's a combination of individuals talking together, as well as those that might have more area of the expertise in specific kinds of limited partnerships or mutual funds or whatever, and they study those prospectus and that's how it all comes together? Is that kind of the way I'm visualizing it here correctly?
Yes, absolutely. So in the grand scheme of things, the 25 or so individuals focuses only on high quality fixed income. So none of
Okay.
them are looking at stocks or private equity or hedge funds or any of the really exciting things that my family thinks I do for a living. They focus only on corporate debt, high quality corporate debt, governments, agencies, only the types of things that can be purchased in the state of Wisconsin.
Okay.
And yes, there are lots of opinions and a lot of different personalities. And I've been told that those meetings can be quite exciting sometimes when they debate. But generally speaking, that's all they do. We are, as a firm, even those that might be on the investment committee that might want to challenge things, we are very conservative. We don't buy too much. We don't take too many risks. All of our clients essentially are public entities. So it wouldn't serve us well or them well to be over risky with any of our investment strategies.
Thank you, Kathleen.
Any other, excuse me, any other questions for Kathleen? And supervisors have anything else?
I'll stop sharing.
Okay, hearing none. Kathleen, do you have anything else for us?
No, that's all. Thank you so much for having me. I believe Brian will be back next, but I hope to come and meet you again soon.
You share that report with us
Oh, sure.
electronically?
Yeah, I can make sure your staff has it and then they can distribute it.
Thank you.
Okay, thank you, Kathleen. Appreciate your time and I'm glad to see that we're above market. It seems like you can't look at your savings account and say that anymore. But anyway, thank you very much.
Bye, thank you.
Bye.
Okay, sorry, I jumped ahead on our agenda here. But now we do have the staff reports, like I said, that are from our departments and divisions. Anybody have any specific questions? If not, are any of the staff care to add to or highlight anything that they have in the reports?
I will note that for the, hopefully you've noticed that for the Human Resources staff report, it's always accompanied by additional memoranda related to the extension of LTE positions. And we did have 4 of those that were extended. Contact tracers. Surprisingly enough, this pandemic hasn't gone away. So I wanted to highlight that one in case you didn't happen to notice that there was that additional report.
Okay, any questions? Supervisor, have any questions as far as any of the reports that were included in your packet?
Mr. Chair,
Yes, Mr. Tripp.
question for the county manager. This kind of specific item number 8. Any motion on the negotiations with the Menominee Fire Department? I don't need the details, just, is that moving forward?
Yeah, we came to a resolution.
Okay. Is that going to require any activity by the Judiciary and Law Committee?
No.
Okay. Thank you. And the other thing I was looking at was item number 10. Preparation and review of a market value study for the county's skilled nursing facility. Can you tell me what the motivation behind that study was? What the results may have shown?
The motivation for the study was just so that we have good information at our fingertips. The last time we had a market analysis on the neighbors in terms of its value was several years ago. and the market has changed. There's a business that of course sells skilled nursing facilities, and they provide a free assessment. They gather all of our financial data. They look at our particular market and they generate an estimated market value. And we just wanted to have that information at our fingertips. It's not that anything's imminent. It's certainly not imminent, but it's good information to have.
Okay, thank you. I appreciate that. One more question then, if I might, and it's on the next page on your budget summary. It's under the general administration budget. The revenues, the number just jumps out, and I'm sure there's a timing explanation for it. But under revenues, the general administration remaining is a minus 567%.
That has to do with the vagaries of our CFO's bean counting. And I really have to defer to him to explain the beans.
Are you saying, never mind, I won't make any editorial comments, but there he goes.
He's left. He's out of here. You know, Keith, shooting the screen won't actually hurt us.
No, I'm guessing that it has something to do with either some timing of some grant money or something like that. But
Yeah,
the
sorry
number
about-
is so astounding that I had to ask.
Yeah, no, thank you. I appreciate that. And I expected that. We're still settling into, these new monthly reports that are at a very high level. And this is a budget that will jump off the page at you through a year. This is kind of the shock absorber when it comes to sales tax coming in.
Okay.
One of the things, because monthly that could be hundreds of thousands of dollars. And so this is within an expected range as it is, but this is where your fund balance comes out of, contingency fund use, all of that. So this, unlike an operating department, can have some pretty significant variances through the year, but this is where you balance your budget for property tax levy. All the departments balance 100% cost center wise. This is where any adjustments are made. So,
And you mentioned sales tax. Do we get like quarterly payments from the state, or how does that work?
no, sales tax we receive monthly.
Oh, okay.
Yeah.
All right.
But
Thank
yeah, you are right. It is tied in many respects to timing.
By
I
the
didn't
way,
understand any of that, but I appreciate the answer.
I was going to say something you can understand. We do get those sales tax. We're actually doing better in sales tax compared to this time last year. So
That's what I heard. Sales tax collections are up.
sales tax collections are up.
Yeah, across the state of Wisconsin, local units of government are doing well with sales taxes in general, especially rural.
And that applies to Dunn County as well, right?
Correct.
Yeah.
Thank you, Jim. I have a question, and this came up from Mr. Tripp at a different time, and I had no answer for it. And so, Keith, I'm going to defer this to you. We did the closeout of those 2-year-old outstanding checks. Do we have to pay any fee to the bank for that, or is this just a in-house matter that we don't really cancel the checks, or do we cancel them and have to pay a fee for them?
That's a fair question. No, we do not pay a fee. What happens is when the treasurer works with me, but when the treasurer goes out for RFP, the last several contracts, including the most recent renewal with Bremer Bank, has a negotiated terms where we don't pay fees for these. We're expected to keep a certain amount of money minimally in their account, which offsets the fees.
Exactly.
But
If they
we
were to
don't
turn
pay.
around and demand fees for us canceling a handful of checks each year, we're going to look for another bank.
Exactly, especially with the size and the amount of banking we bring through.
And it obviously it came up because personal account, some of those banks, if you have a certain kind of account, it's very little, if any. In other banks, it's $25 or more. And so that was, we were hoping it wasn't $25 per check or something. Good, thank you.
Mr. Chair?
Go ahead, Sheila.
Well, I just back on the sales tax. It's my understanding from one of my county meetings that I attended this last year is that because people are buying online, we get the tax wherever the business is, we'll get that tax if they purchased it in Dunn County. They utilize their computers in Dunn County, it comes back to Dunn County. Is that something that you were aware of as well, Keith?
Oh,
That's why it would be
absolutely.
higher?
It wasn't that many years ago. I don't remember the exact year, but there was a time when those funds weren't coming to county. And state law was changed a few years ago that we are receiving that revenue. And then with COVID and people working remote or spending more time remote, that kind of elevated. And we've all heard about the increase in Amazon and all these other online services. That's benefiting, especially rural counties that didn't have the retail activity in county. For example, Eau Claire County and others may have seen a drop because they didn't have physical sales happening in their box stores. It was, when it shifted more to online, it shifted more of it to other areas. So we've been a beneficiary of that, like many other rural counties in the state.
So if we ever go back to normal, whatever normal might be, then we might have to look at that figure and make it and bring it back down again a little bit because we might be buying locally a little bit more, but maybe not spending as much money.
If I had to speculate, this is also kind of tied to a societal shift with generation doing more online. Or many people, not just younger generation, but many people are more comfortable with online. So I don't know it's going to be a dramatic shift, but it's certainly something that has to be monitored, which is a normal course of business anyway.
Thank you.
Okay, anything else for anyone?
Supervisor Tripp.
Supervisor Tripp, go ahead, Jim.
God, you'd think I'd learn, wouldn't you? One other question for the finance officer, and that's in the second part of your report where you talk about enhanced financial report monitoring for the highway department. What would that entail for, and what I'm thinking of is right now the Committee on Administration looks at the vouchers for all but highways and the neighbors, I believe. Is that correct? We do everybody else? Would an enhanced monitoring requirement maybe put some of those vouchers under our scrutiny as well, or what are we talking about here?
Sorry, you think I'd learn how to unmute too.
I can't.
Really what that is, Supervisor Tripp, is this is going to be a enhanced monitoring for a period of time. And there will be adjustments and changes in some of the reporting from where they're at currently. And that will be mainly with the Highway Committee. Because under county ordinance and Wisconsin statutes, there are specific authorities with the Highway Commissioner and the Highway Committee. So it'd be enhancing and increasing the reporting out to the committee to stay on top of things even closer than current.
Thank you. I understand generally what's happening. I just wondered what the ramifications of that might be. Thank you.
Well, and like I mentioned, at least at a very high level, we're doing a complete ground up rebuild and analysis and review. And we're working closely with the interim highway commissioner to look at the 22 budget and see what we can do to make that much clearer so that everybody's understanding in more depth of what's in that budget and to be able to help the committee and everybody understand what's there and monitor.
Okay, any other questions? Okay, any other comments from any of the department managers who are on the reports? Okay, hearing none. We'll move on. Our next item is consideration for actions be taken by the committee. And the first is 8A, contingency fund request. And that is a request actually to indulge in a financial audit of the highway department. Anyone care to speak to that?
I can, Mr. Chair. Because we had cause to do an investigation on allegations of some financial mismanagement at the Highway Department, some of which appeared to be corroborated. We now have to undertake a more formal audit to make sure that there's nothing else. But the audit is necessary in part for our independent assessment. This independent assessment is necessary because we've got upcoming federal and state funds reports that have to be done. And our auditor, our county auditor, Clifton Larson Allen, will put on hold those reports pending the outcome of this financial audit. We need to be able to assure state, federal government, and in fact, our contractors that our fiscal house is in order. We do not expect to find mismanagement, but we won't know until we do the audit, and we won't be able to assure that the audit was complete unless it's independent. We've received a proposal from CLA to do this audit on the Highway Department. The range is anywhere from $47,000 to $66,000. And so we're requesting the committee approve, since it controls the contingency fund, approve up to $67,000 in the contingency fund this year for us to retain CLA, our audit firm, to do that forensic audit of the highway. And it may not be concluded by the end of the year, so we'd also be looking for approval to carry that forward, should it not be concluded, and so that we can bring it to an appropriate conclusion.
Okay. All right. Thank you, Mr. Miller. Any questions by the committee?
Supervisor.
Mr. Tripp, you have your hand up. Go ahead, Jim.
I will move that we approve this, and then I'd like to ask a question and speak to it.
Okay. We have a motion, a second by Supervisor Leno. So at this point, questions or concerns? Jim, go ahead.
I just wondered how much we have in contingency, and are there any other requests from contingency that might come in before the end of the year that would put a strain on that budget? And what I'm thinking about specifically is being so close to the end of the year, we could postpone the request if needed to next year.
We don't need to postpone it. We, number one, 67,000 is what we have in the remainder of this year's contingency fund. We're not anticipating any other contingency fund requests. And hopefully if we do get any others, they're not of the emergency nature and that we can't defer those until January. So staff fully looked at those possibilities. And that's why our recommendation is to use the balance, the remainder of this year's contingency fund allocation for this purpose.
Did the auditors know how much we had in contingency when they turned in their bid?
One needn't be so cynical, Supervisor Tripp.
Just thinking about Mark Twain, who after he built his house said that the plumbers didn't know that he had another $10,000, so he got to buy some furniture too.
If I could, Mr. Chair, add to the, when we met with the audit firm, there was no discussion on price early on. But this is the type of audit. This is a special audit, a forensic audit. And it's really, a lot of it's going to be, the cost is going to be driven about by what the findings are, if any, and how much the level of effort will be. You know, a situation or a review like this can take a lot of paths. If you start down a path and you start seeing details that require more digging into things, that's when the cost starts coming. Now, having said that, there are checks in place to make sure that that doesn't get out of control. There are expectations and communications through this process that the county can stop it at any time. So it's not an open-ended blank check or engagement. It really is very specific checkpoints. And even through the CFO transition, there is a team that will be monitoring this and will be involved in this. It will involve, county manager will be plugged into this, myself as CFO until the new CFO is brought on board, the senior accounting manager, so this will be heavily monitored. There will be a lot of involvement by the key team to make sure that we keep control of this as well.
Okay, any other questions?
Chairman Bartlett has his
I
hand up.
got,
David, go ahead.
I just want to be certain that we need to do this. We're doing this because we want to, right? Nobody is making us do it, or we don't have to do it. So, yeah, Mr. Miller just said we have no expectation to find anything. So I'm just wondering, I don't know the circumstances, so I have to rely on Nick and Mr. Miller that this is absolutely necessary. It seems like a lot of money if we don't expect to find anything.
The biggest thing, Chairman Bartlett, that kind of puts us in a position we have to do this. Clifton Larson Allen, which is our auditing firm, has put on hold finishing our required federal and state single audit process for the fiscal year, pending this independent assessment. So that process, which is required, is on hold because they can't complete it without being able to say this audit has been done. Keith?
So they're making us do this.
Basically.
The situation is making us do this because without that single audit report, that potentially jeopardizes our ability to receive future federal or state dollars, including reimbursements for state work. And it's countywide. It's not just department specific, because when the federal government looks at us, they look at us as an entity, and we receive millions of dollars in federal and state dollars throughout the year. They're in our budget in multiple departments. So with this audit on report, those agencies rely on the single audit report. And if there's findings that come out of it, or if there's a delay, there would be consideration for some impact to future funding and even existing funding. If the particular agency or grant program feels that there's an issue, they could require the county to pay money back.
And it's not
That's one of the
just
driving.
that CLA wants to get more money out of the county and knows it could put this single audit report on hold and compel us to do a forensic audit. They feel compelled, in order to meet their own standards, to be able to demonstrate to the federal government that they are a qualified auditing firm that meets the best management practices and standards. So either they put it on hold and we conduct this financial audit to give the assurances that they feel they need to communicate to everybody else, hey, as an auditor, we're good, we're following practices that are supposed to follow. They could issue a single audit that has a great big caveat that says, well, there may have been problems in the highway, but we didn't do an audit because we were told by the county we couldn't. And I don't think we want that flag on that
No.
audit.
No.
Mr. Chair,
Mr. Tripp, go ahead.
I want to encourage Mr. Miller and Mr. Stride to continue this explanation, not just to us, because I think it's a little bit disquieting for a lot of people to look at a situation where our audit firm won't complete an audit until we do the forensic audit, and then they're the ones doing the forensic audit. So there's reassurances, in order, this has got to be a situation that you can explain to not just this committee, I think, but the general public and to the board as a whole. And you just keep reassuring me, because this makes me nervous.
Makes us nervous too. Ultimately, Supervisor Tripp, last thing I'll say on it, this ultimately is about transparency. Transparency on our finances. Clifton Larson Allen, as our county auditor, remains an independent source. CLA serves many clients, not just Dunn County. And because they are our auditor, they're the ones in the best position to conduct that forensic audit. They have a relationship with us. They have access. They know our business and what we do. But it's about transparency. It's about not hand waving a possibility that there could be other mismanagement that we simply haven't brought to light.
Any other questions or comments? Thank you, Keith, and thank you for the questions. Anything else anybody wants answers to? Okay, hearing none, we have a motion and a second. I'm going to call the question. All those in favor of moving forward and granting the use of up to $67,000 of contingency funds for this audit, please signify by saying aye.
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 Any opposed? Okay, it passes. Thank you for the explanations, and Jim, thank you for bringing that up. You're right. We do need to make this part of it also as transparent as we can, because I know it's raised some red flags. All right. Our next item in the business is to out of class pay extension. And again, we've already mentioned the fact that we have a interim a person running the highway department, and obviously is not the pay scale that the would be at if they were a permanent person in that department. And so we have a out of class pay request for Dustin Binder, and good explanation there, again, why. And any questions about this? Okay, now it's
I'll make a motion.
okay. Thank you, David. We have a motion, Mr. Bartlett, second by Mr. Leno, to go ahead and grant this extension of class of pay. And any other questions? Okay, hearing none. All in favor, please signify by saying aye.
Aye.
Aye. Any opposed? Passes, and thank you very much for bringing this up. I'm glad that we take care of it.
Mr. Chair, if I may add for the record, Dustin Bender is doing a stellar job in the interim capacity. He's really stepped up, been very communicative, very cooperative, and he seems to have the right kind of sensibilities for operating that department. So we're lucky that he's in that role, and it's totally appropriate to arrange for this out of class pay for as long as he is required to be in that role.
Thank you. Appreciate that. I've heard a couple good comments about him, but you know, they're sometimes you know, if they're close friends or if they're you know, what the case may be, but I took them to heart that they were pretty good. Heather Murray has asking for an amendment to the COVID temporary modified policies and procedures. Again, we've continually had to go temporary modification of those things. Is Heather still with us?
She is.
Okay, go ahead, Heather, and take us through this.
All right. As Supervisor Headland indicated, we've been reviewing these policies on a regular basis for quite some time now. We had extended the original, so the original FFCRA expired 12/31 of 20. And then there was a temporary, you could extend it if you chose to through March. We did choose to do that, and then decided as a group that we were going to continue it, waiting on additional guidance from the Biden administration. We have not seen that guidance, and actually we've heard no chatter of like anything coming with regard to this. So at this point, I'm comfortable in saying that to continue to wait is, we're probably not going to see information, at least not anytime in the near future. I surveyed some surrounding counties to see when they discontinued the sick leave component, the sick leave pay component. And Barron, Chippewa, St. Croix all discontinued it on 12/31. They didn't do that temporary extension through March. So 12/31 of 20. And I didn't hear back from Eau Claire, so I can't speak to that. But based on the lack of guidance and the fact that we've gone an additional year beyond what we were originally mandated to do, I'm recommending removing Section 7 at this point, which is the paid sick leave component due to COVID. What we are also recommending is amending what was Section 8 to Section 7, and just address that any absence due to COVID, you can use any leave bank. So for example, sick leave right now, you have to be sick, but if you have a child that's out, it would allow for that, or if there's somebody that you need to provide care for that maybe that sick leave bank wouldn't otherwise qualify them for. It does still, we are recommending leaving in the ability to go into the negative balance, but having to pay that back if you leave. Some of the other items to really try and still help the employees, it's just that paid component that we aren't necessarily getting reimbursement for. The county has just been funding that. And then obviously renumbering and restructuring the policy. The other change is the addition of the floating holiday carryover for the emergency communications group. Traditionally, if you don't use your floating holidays by the end of the year, you lose them. You start over in the next year. That group has been facing some turnover and some employee leaves. They've really been facing some scheduling challenges. And so the employees have been stepping up, but that also means that they have not been taking off. And so we're anticipating some relief in the first quarter of next year. And so we're recommending allowing that balance to run through the first quarter of 2022 within this policy. So we're requesting endorsement and approval of the temporary policy modification. I will note for some reason, the deletion of all of Section 7 didn't take. So if you choose to approve this, if it could indicate that it is the entire Section 7, even though the draft in front of you has some of the language left in, I would appreciate that. And then I guess that's it. Requesting endorsement and approval of these modifications.
Okay, and I think I've got this right, but what we're talking about is the holidays that they would accrue in 2021 normally would need to, or is these 2020 holidays that they need to burn up by the end of 2021?
So this group, instead of the normal holidays, because they're 24/7, they get an allocation at the beginning of the year of floating holidays for the same number of hours. They just haven't been able to utilize those. So, I just don't work on Thanksgiving Day. They have to work. So we just let them choose a different time off. So
these are 2021 hours.
Yeah, absolutely.
Not back to 2020 year. Okay. All right. Thank you. Anyone? Dave, go ahead.
Yes. My question has to do with these floating holidays. Given the struggle that it's been to fill those positions, and knowing that with training time and everything, if they had an open position right now that they were filling the first year, it would take some time for training and everything. I'm wondering if extending it to May 7th is enough. I mean, we're talking about a small group of employees, a special group of employees. I think we should, I don't know, I would consider extending it a number of more months, or for the entire year of 22. I just know that department has struggled with employees, and it just seems like if we want to make somebody take a vacation before May 7th, that may cause a bigger struggle also. So I'm just throwing that out there.
if I can respond only with information that I believe is correct, based on discussion with Melissa. So they had 3 vacancies this year and they spaced out filling them. So 2 of them should be completed with training, and then they're starting that 3rd one. So, and then they have 1 person out on a leave. We anticipate those 3 being back, but the leave could go longer, and then it would still be 2 vacancies. So it's a great point, Supervisor Bartlett.
David, would you like to suggest an amended date?
I would amend it to give them throughout the year of 22.
December 31st of 22.
Okay,
Correct.
all right. Would you like to make that a motion?
I would like to make that a amendment to this amendment. Yes.
Okay. All right,
I'll
so-
second it.
All right, we have a second motion made by Chairman Bartlett and a second by Supervisor Leno that the report here to extend the use of the hours of the Emergency Communication Department would extend the use of that all the way to the end, or December 31st of 2022 to use those hours up. Any other comment?
I have one other quick comment in regards to that. If some guidance comes from the federal government on that, would it be a problem to rescind?
Before I answer, I'll just read the end of the policy document. I believe I have in there, future changes to employment law or the pandemic status may require modification or discontinuation of the policy at any time.
Okay.
Temporary and may be discontinued or modified at any time with or without notice. So I have that in there.
We're covered.
Okay.
Covered. Sounds good. Thanks, Tim.
You bet.
All right. Any other questions? Hearing none. All those in favor of the extending the modified COVID policies and procedures for our staff to include the amount as instead of the amount or dates printed of May 7th, 2022 for the use of those built up floating holidays, that would be pushed out to December 31st of 2022.
Yeah, we're voting on just my amendment first.
Right, okay. So let's vote on that amendment. All those in favor say aye.
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 Any opposed? Hearing none. Okay, so then Heather, you can amend that for us?
Yes.
So that will read, okay.
Yes.
All right, so it would read the need to use the carried over time by December 31st, 2022, or the hours well before.
Correct.
Right.
Mhm.
Now we need a motion on the policy extension as modified.
As modified. All right. Anyone care to make that motion? Chairman
move.
Bartlett moves.
Supervisor Story has her hand up.
Supervisor Story seconds. Any questions? Hearing none.
And I have
All-
a procedural question. I'm sorry.
Yes.
There's
go ahead.
stuff that's in the document from section 7 that we need to delete. Do we need to consider that to be an amendment as well? Or no?
No, I think that we can count that as a Scrivener's error.
Okay, thank you.
Okay.
Hard to find good Scriveners these days.
Thank you, sorry.
That's okay. Thank you. All those in favor of the amended policy extension, please signify by saying aye.
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 Aye. Any opposed? Okay. Heather, you got, are you satisfied with that? Are we good to go?
Yes, thank you.
You got, thank you. All right. Our next item of business is the change to the crime insurance renewal. And Heather, you had information in there about a cost of I believe, $50,000 coverage with $10,000 deductible. Is that correct?
Correct.
Okay.
So at the previous meeting, we were asked to get this information. Our current coverage does cover employee theft, the forgery or alteration, theft of monies, robbery, computer and funds transfer fraud, money orders, and counterfeit money. But it does not cover fraudulent impersonation coverage, which is an employee that is deceiving someone into transferring money by pretending to be an employee of a vendor or a customer. So we did have to share the most recent event in order to receive that quote. So the cost for 2022 to add that fraudulent impersonation coverage is $1,510. And that is the $50,000 coverage with a $10,000 deductible. So that is what we found out.
Any questions about this? This is something we did ask that someone would investigate for us. Anyone care to make a motion, move forward with this additional coverage?
So moved.
Okay, Supervisor Lena moves that we would go ahead and move forward with adding this to our insurance policy. Second to that.
Supervisor Calabrese had his hand up.
Thank you, John. I don't see everybody here, so.
I thought, I figured you didn't, Chairman Headland. That's why I keep volunteering when I see hands. I can see everybody.
I don't, yeah.
I'm county manager, I see all.
Good, but I'm glad someone does. All right, thank you, John, for a second. Questions?
Mr. Chair, this is Tripp.
Mr. Tripp, go ahead, please.
I have a little bit of hesitation about this. If I understand it correctly, the policy would cover us up to $50,000 with a $10,000 deductible. Is that correct? So if we paid the premiums for, let's say 5 years, that's $7,500 and a $10,000 deductible. And what was that last charge that we actually got stuck with?
$168,000.
Yeah. So anything over that, there's another $118,000. I'm not much of a gambler, but in this case, I don't know that the investment in this insurance is particularly a very good bet. And so I'm going to vote against it and rely on the fact that once burned, twice shy, and we will be a little bit more cautious going forward, and we can get by for another few years without it. I have one question though, and that is this. If we were to go for the next, let's say 5 years without any kind of similar incident or claim, is it possible that given today's rates, we could get a better rate on an insurance policy like this?
I can only make an assumption, and my assumption would be yes. I think that the recent activity probably did not help.
Right.
I'll argue the opposite side. I think we are going to see across the board, across the nation, not Dunn County, everybody, more of these kinds of attacks. And a good point is made that for every person devoted to security and thwarting the cyber criminals, there are 100 or 1,000 criminals working to get around that security. Insurance for protection against this kind of cyber fraud, I think is going to be paying out for those who have begin to get it, paying out a lot of money, which tells me that we could expect premiums and costs to go up, not down. Now that maybe I'm being hyper cynical, but I would be surprised in 5 years if it was cheaper to get this kind of insurance than it is today, which does not say anything against Supervisor Tripp, your point that, the fact is we did learn from this incident. We have put in additional measures to try to avoid this happening. What will catch Dunn County in the future isn't this instance. It'll be something else.
Mm-hmm.
I understand all that, and I appreciate those arguments, but this strikes me a little bit like long-term care insurance that 15 years ago was very popular, and buy it now because the rates will go up. And frankly, the prediction at that time for the need for long-term care insurance was correct. People are living longer and they're needing more care as they get older. But long-term care insurance today is a thing of the past. Not only has the situation changed, but so has the financing. So it just seems like an awful lot of money to pay for a fairly small amount of coverage for a likelihood that I think is within our margin of risk.
Chairman Bartlett, go ahead.
I agree with that. When I looked at these figures, I thought these are terrible expense for what coverage we get. My thought was, though, that possibly getting our foot in the door, that we may be able to get more coverage, but you never know what the cost is going to be. But I think because of what happened to us, our coverage is limited at this time. Somewhat like homeowners insurance or auto insurance. If you have too many claims, your deductible goes way up for a while and your cost goes up. And if you don't have insurance, I don't know. I think if we have to start someplace, and I'm thinking this may be the start. Because I agree with Mr. Miller that it's probably not going to be the same thing that we had this last time, but it'll be something different. And that we haven't put our controls completely in, although Mr. Dunbar is doing a wonderful job training us to try to protect us from doing something wrong.
Well, and if I may, I wanted to bring that up. If you look at my report, you'll see a screenshot of our fishing exercises that we've been doing, and you'll see at the time I took that screenshot, November wasn't over yet, but November did come back into line with all of the other months where we are in almost 20% of our employees are falling for a phishing scam each month. So when you say, once bitten, twice shy, we're not seeing that evidence through our training right now. And we're doing our best, but there's a lot of people out there trying to get us.
Well, I'm impressed with that training, and when you get done, it tells you what experience you've had with their testing you, and it's been since August that I fell for one of their tricks, but they're good ones.
I just might say that I agree a little bit with the strategy that obviously we probably would like more than 50,000 coverage. But I think we're kind of like that driver who just had a accident and was issued a speeding ticket so I'm at fault with the accident. Your rates are going to go up and your coverage is that you buy is going to be expensive. But I think that if you have a good track record as you go along in a couple of years, this company is going to want to sell some insurance. And so they might come back and say, okay, now according to our records, you guys have done okay. And, would you like 150,000 of coverage for this price? And so but if you don't have a company to work with, they may, companies become real leery about accepting poor drivers even at all. So I think if we can prove we're a good driver, so to speak, it'll get better. Okay,
Chairman?
any other questions or comments? Sheila?
Yes, this is one of those where I've been listening to both sides of the debate and I'm kind of right in the middle right now, trying to decide which way I'd want to go. Because what I'm thinking is that there's like a supply and demand thing going on here. You know, it's like the new crime. And it seems like there's a lot more of it going on. And usually when that happens, then they come up with solutions to it. Plus you get a lot of people that are going to be out there saying, oh, here's a new market. I'm going to put out different policies and everybody's going to have to compete with each other. I would expect that that's where it's going to go. But on the other hand, a lot of times when you don't have any insurance, that's when you get stung, whether or not you put things in place or not. So I don't know. I'm still kind of trying to decide which way I want to go with this. So if anybody else has anything else to say that might help me, I would appreciate it.
Okay, thank you. Anyone else?
Yeah, I do. Vaughn?
Go ahead, Jim. Thank you, Tim.
My history is insurance for the last 34 years. And lots of times when, let's say you apply for life insurance, okay, you can get it if you have no health history. We have a health history, a pretty substantial one, and it's public knowledge. And so these companies understand this, but it's not uncommon to be able to go back to the insurance company after a year or two and just say, we haven't had any claims, we haven't had any problems, and request an increase in coverage and or decrease in premium. It's very common.
Thank you for that, Chairman Leno.
Thank you.
Chairman, Supervisor Leno.
So,
Temporary promotion.
Anyone else with any comments? Okay, if not, I'd like to have us vote on it. All those in favor of implementing this additional coverage to with our current carrier here, signify by saying aye.
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 Any opposed?
No.
Okay, thank you. Motion passes. Next on our agenda for the day, review of the vouchers. Anyone have any questions concerning our list of vouchers for the previous month?
I do, Chairman.
Chairman Bartlett, go ahead.
I apologize to keep harping about this, but it just seems that it's way too high. We've got red. Let's see, maybe I read it wrong. We've got water and lights that we're paying Red Cedar Racing about $200. That seems about right to me. But then we have water and lights to the city of Menominee in northern states of another $1,280. And last month I had the same questions. It seems, my God, $1,000 a month or more. And we don't have anything going out there at the rec park. I just don't understand that. So I guess what I'm asking for is the explanation to go a little further than I looked at this, and it's normal. I'd like some explanation of why it's so much.
And Chairman Bartlett, I can pass your comments on to the facilities director. I did reach out to him directly about this, and certainly I can convey this as well. He's definitely aware of the sensitivities and the history on this, but yeah, I can convey that and ask him, and maybe if you're okay with it, I'll have him respond directly to the committee.
Yeah.
Yeah, that's fine. That'd be great.
I think it would be in order for Scott Navifeld to provide maybe a written email explanation on this.
Yeah, I'll follow up.
Explain why our bills are so much.
You bet. I'll send him an email to ask him to provide us a more or less a more detailed reporting on this.
I mean, to me, it almost sounds like we got a leaky water here.
Well, yeah, you know, that's what I'm wondering about, you know,
Well, you know, what I had learned is that when I got my last city bill, it was like 4 times what it was supposed to be. So they, of course, came out and wanted to look at it to try and figure out what the reason was. The only thing we could find is that there was a toilet where it wasn't going out, it was going up over the top, so it was constantly running, but you couldn't hear it. Maybe something like that could be going on too. So I think it's a good idea to get it checked out. And I had to pay the whole thing, so, you know, it's like,
Ouch.
Chairman Edlin?
Yes, go ahead.
May I ask the group, any city of Menominee residents, was there a recent increase in the water rates as well, water and sewer rates that you're aware of? Something sticks in the back of my mind that I heard or read something about that, but can't say for sure.
A couple of years ago, there was a significant increase in the water and sewage rates, but nothing in the last 15, 18 months.
Okay. Well, I'll pass.
I assume that, you know, I want to assume it's not a leaky faucet or a toilet, because the last month, Scott came back and said that he looked into it and it seemed normal. But I want an explanation of why $1,000 a month is normal,
The water, right?
Yep.
you know.
Okay. Yeah, I'll follow up with Scott and ask him to prepare something for the committee.
Thank you.
I suppose there's even an outside possibility. Somebody's going onto the park and filling up
Right.
at our expense.
Yeah.
Are there a lot of spigots off the back of the animal buildings or anything like that? I wonder.
I believe that there are faucets that can be accessed, but like I said, I shouldn't speculate. I don't know, but we will look into it.
Right.
Okay, thank you. Anything else? Okay, hearing no other questions, comments. Do you have anybody showing their hand, Mr. Miller?
No, you haven't called for the vote. I mean, for the motion.
Okay, need a motion to accept vouchers?
Supervisor Lee now.
Yep.
Supervisor Lezano moves.
I'll second.
Supervisor Calabrese seconds. Any other questions? Okay, hearing none. All in favor, please say aye.
Aye.
Aye. Any opposed? Okay, fine, we'll move on. We're on number 9, which is a consideration for reports, resolutions, and ordinances to the county board from the committee administration. A resolution approving the labor agreement with the powers of arrest employees. And that agreement was both in our packet and in a separate email that came, or part of the, I think, information for the interview packet of information. Any one care to make a motion so we can discuss it?
I'll make the motion.
Okay. Chairman Bartlett moves. Any second?
I'll second Tim Lino.
Okay, Mr. Lino seconds. Okay, any questions or comments as to the agreement between the basically be our sheriff's department and deputies and the employees at the jail? There was also included some charts with wage levels and so forth, along with a lot of language that changed. Most of it was a deletion of some language that didn't pertain to the contract anymore. Any questions or comments?
Can I provide one clarification?
Sure, go ahead, please.
Just deputies, not the jail employees.
Not in jail?
No,
Okay,
just powers of arrest.
there's powers of arrest in this one. Okay. There was a schedule for them, though, was there not a pay schedule for?
No, there shouldn't have been.
No,
that-
it's just deputy and court security officer.
Right.
Okay, court security officer. I'm sorry.
Yeah.
Yeah, I know that is totally my mistake. Court security officer. I didn't look back at it. Thank you, Heather. Okay,
And are
so
we down to one court security officer?
Not yet.
Two yet?
Two, isn't it? Yeah.
We have one officer right now, that's Bruce Sampson, who is specifically designated as a court security officer. He has been serving in that role for probably 20 years.
Mhm.
And that was the sheriff making the appointment outside the context of the collective bargaining agreement. And it did result in some arbitration that the county had to go to. And then the other deputy that's an assignment. So there are two deputies that work in the courthouse, or there are two law enforcement officers that work in the courthouse. One is designated as a court security officer, and that's the only assignment. And the other one is a deputy, and that can be an assignment among any of the road deputies.
So that position, I guess that's where I was going with my question. That position is getting paid the deputy wage schedule instead of the court security schedule. Is that true? Is that the way I understand?
Cannot answer that off the top of my head.
If I can weigh in on this, I don't think that court security officer has powers of arrest. And
don't.
I know that the sheriff in this 2022 budget developed a budget operating on the assumption that that individual was going to retire, and his position would not be, there would not be a position of court security officer. They would handle those duties with sworn deputies who could then swap out to be, road deputies as well. So I think that if I'm correct in this, that position actually, once this individual retires, will be unfilled.
And I may be wrong, Heather may be able to correct me. I seem to recall that the pay for the assigned deputies, when a deputy is assigned court security, is the same, that it's not a different pay rate for that assignment.
That's what I was asking.
Yeah,
Thank
I would have to,
If we find out differently, Chairman Bartlett, we will let everybody know.
any other questions about the proposed labor contract here? Okay, hearing none. And thank you, Heather, for correcting me. It does not include the employees of the jail. Just the one assigned court deputy, and then all the staff with powers of arrest. Okay, thank you. Well, all those in favor of approving this, please signify by saying aye.
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 Aye. Any opposed? Seeing or hearing none?
Made the motion.
You did.
Okay. I was thinking I did, but I couldn't remember.
Whenever anybody asks that question, we always say it's them.
Yeah. I believe it was
Long day.
I believe it was
No,
Mr. Leo. Okay.
One thing I will point out for the committee, this will go in front of the full county board in January. Now, we are having a special meeting of the county board December 15. This will not be on that agenda. We've only got a couple of items that are time sensitive, and that will be on the December 15th. So this will be on the January county board agenda.
But it will be retroactive. Is that the terminology that I saw in here?
Yes.
to January 1, as far as
Right.
pay for the people. Okay.
Mhm.
Any announcements other than our next meeting?
Mr.
Just a
Chair.
quick,
Oh,
go ahead.
Go ahead.
sorry.
Was it Sheila? Did you-
No, let, John can go ahead.
Thank you.
Oh, okay. Next meeting will be January 27th, 2022, 3:30 PM in the afternoon. And I would, at this point, assume it will be via Zoom.
That should be 3 o'clock. Not three.
Oh, I'm sorry, you're gonna go stay at 3?
Yeah, 3 o'clock.
Okay, all right, 3 PM. Okay, so we get done before the second meeting.
And then
guys-
Supervisor Calabrese had an announcement.
John, go ahead.
Yeah, just a question. On our packets, and it hasn't been this way forever, but when you would scroll through the packets, there's a lot of like almost every other page is blank. And sometimes I like to print some things, and I'm wondering if that's too much of a pain to change that in some way, or if it's just the way it is. I can obviously deal with it, but
You know, it has to do with some arcane incantation that the person who scans the packet to create the PDF has to undergo. And I don't know if it's a matter of adding the eye of newt or the toe of frog, but I will follow up with them again and see if we can eliminate those, because they drive me nuts too. So I'll see if we can eliminate the blank pages.
okay, thank you.
Chairman Headland, mine was just a question, and I hesitate to even bring it up, but it's something that's been bothering me, and I don't know even where it belongs. But as we listen to the news, there's that issue that's going on right now, and I hesitate because it's kind of political, and it's where our taxpayer dollars are going to be going to cover the costs of the election, checking on the elections, and I just wonder if it would makes sense to do some kind of a resolution to the legislature to basically say that we don't want our tax dollars going towards something like that, or if that would just open a can of worms or what. But it's something that was bothering me, so I thought I would bring it up.
Now, this is additional tax dollars? I mean, obviously our tax dollars pay for the elections anyway.
I believe it's tax dollars that aren't budgeted for that.
627,000.
Yeah, it's substantial. And whether you agree with the politics or not, I guess I just have a real problem with our tax dollars going towards that.
That much money.
Yeah, so whether or not that belongs in our committee or doesn't, or whether it's something we could do, or again, whether it just would cause more difficulties or more problems, I don't know, but it's something that I have thought about and wanted to just bring up.
So that's Wisconsin only?
Oh, it's not just Wisconsin.
I
Oh,
wonder,
that's-
It's Wisconsin. Yeah.
That's what-
I wonder if Supervisor Tripp, as being with the WCA, has heard any chatter from the Wisconsin Counties Association on this issue?
This is the kind of thing that they would stay away from because, as Supervisor Story indicates, it is political.
It's a partisan issue.
And this is an allocation of $720,000 total that they allocated to look into the election. And if you're paying close attention to the Wheeler report and the WISP politics, they have in the last few days outlined exactly where the money is going because they finally got the invoices. And I am entirely sympathetic to your point, Sheila, but I don't think it's an appropriate thing for the county
Okay.
board to take up.
Okay.
Yeah, I agree with that. I think whatever we do would not make a difference. And it would just alienate some of our residents that believe in it.
Kicking the hornet's nest.
Well, there was that part that I thought about, but it still
Yeah,
bothered me,
it's-
so I wondered,
There's some parts of it that are hornet's nest, and I just hope it just clears the air and we're done with it.
I would rather, make my efforts contacting our legislative people on things that I think maybe we can change. This I'm certain there's no change.
Okay,
Chairman?
go ahead, Mr. Leon.
Yes. I'd just like to commend Heather Murray and her headhunters for the absolute quality candidates brought forward for the position today.
Oh,
Kudos all the way.
They
I missed
were
some
very
ones,
good.
huh? I'm
Thank
sorry I missed it. I'm sure you guys will have picked somebody good though.
Yeah, I would agree with you. Thank you, Tim, for bringing that up. I think that with all the things we've got and all the things we seem to be going through and year end and all those kinds of things, to have fit this in. I think maybe we got lucky. The headhunter said that they got some areas they can't find candidates for, people who have, listed their help. And I don't know if you look at that PDM report, if you saw that under the labor thing, the biggest discrepancy in jobs, unemployment, and jobs to be filled, finance.
Yeah.
Yeah.
Yeah, that was the biggest discrepancy on that report nationally. So with that, anything else? If not, we're adjourned. Thank you all for a long day and earning a administrative committee per diem going from 8:30 this morning until 5 o'clock this afternoon. You're all a bargain at the price. Thank you very much.
I worked hard for it today.
See everybody on